Good morning, everybody. Good morning, ladies and gentlemen. Welcome back to another stream. By golly, we made it another day, ladies and gentlemen. Crazy. Yeah, so we'll just get started when a couple of you wonderful people stroll on in. Okay. Good morning. Good morning, no one. Gotta love a good old YouTube stream by yourself, nothing better. Just sitting here drinking my coffee. Hilarious. Whoa, hey, whoa, what's going on there? Nice. Yeah, well, you know, it's gonna be probably a just dandy day. DJT. Do. 560 is 806. Good morning, beautiful people. When at some point we will actually maybe do something. Again, we're still just pretty much hopefully waiting on a potentially good, maybe Santa Claus-ish rally. But market just needs to go into a buy signal first, right? So until that happens, market's not going to really do anything. Until we go into a buy signal, it's just how the game goes. Yeah, so anyways, yeah. Oh, look at our friend Bitcoin bouncing back like nothing ever happened yesterday. SPY currently going up. It essentially yesterday before we got off stream, we said the market had the potential to sell all the way down to $672, and then at $672, you would then look for a bounce on the market. So if we pull up the extended trading hours chart, that's what that looks like. So essentially, if anyone cares, which is only one person, if you want to go back and really you only got to go back a little bit, but if you go back a little bit into yesterday's stream, I don't put timestamps on things. Don't have the time to. Maybe one day I'll learn to. But yeah, so pretty much yesterday, eventually we come to the conclusion. We say, yeah, market can sell all the way down to there. Once we go there, you then look for a bounce. So that is this morning, bouncing all the way back up. Arguably, the market could bounce all the way up to like $678.70, arguably. There's a couple other things I haven't really done this morning as far as targets go, but let me just, yeah, 678.70, 679. I mean, that would, for the moment, that's like best case scenario long. I think right now, let me just double check. 670, 670. Yeah, best case scenario long for this morning. Before, just best case scenario long would be about 678, 60s right now. Market can always do whatever it wants, but I wouldn't be looking higher than 678.60s, 678.70s on the current bounce. Whether that just goes straight up to 678.70 or whether or not we pull back and then go up, or whether or not we even go there in general. It doesn't make sense for me to look higher than 678.70s for the moment. And for the long move to continue, we're going to need the volatility index to break down. And right now it's on its over-under support. So basically the continuation of today's pre-market move, or just in general for today, is going to be built off the back of the volatility index. So that's where the eyes are right now this morning. Our focus is on the market, yes, but the focus right now in this moment is actually the volatility index, because the volatility index is on a specific level that algorithms are currently watching to dictate whether or not we are going to further the continuation on the market and this bounce, or whether or not we're going to stop the long and start to pull the market back. So not that there aren't levels that you could probably use on the S&P 500 this morning to come up with that information, but we're just using the volatility index this morning. So anyways, we're just pretty much going to watch the volatility index. If it breaks down, we're going to see the market squeeze out up to about 678.70s or so. And we're just going to go from there. Happy to the one person watching today. Cheers. Love you. Thanks for tuning in. So what else is there to do? We'll bring up the VIX for the old one little guy. So if you look at the volatility index over here, as we always say, when the VIX is up and above the 50, essentially that is market being a little more fearful. As you can see, the past couple days we dropped the markets. The 50 SMA is priced here at, I don't know what that is. Hold on, it's getting scrunched. There we go. 1677. So that pretty much means when we go to the pre-market chart over here, like I already said, we're watching the VIX because the VIX has sold off down to its support over under. We have just broken it, and we've now done a micro chart pullback and retest and push away. So ultimately, if the market on the VIX maintains this breakdown, which is this, what I'm drawing, that little lower high, then the market will continue to move long bias, and we will look to take the S&P 500 or SPY up to, like I say, 678.70s. There's so much nuance to it. As soon as I start talking, my brain wants to go super sophisticated, detailed analysis, because there's always so many nuances and potential outcomes. But I try to keep it simple, which is simply that, and that is the VIX has broken. I don't want to say the VIX is broken down, because this is pre-market. So we'll just say the VIX has come to a specific price point in the market. And if it does not recover what I've drawn on the screen, the likelihood that we force the market up on the long towards the prices of 670, 870 are good. All right. If for whatever reason the SPY starts to top or whatever, or the VIX does not continue or maintain its kind of transition below the SMA today, that's where I would assume we will look for signaling to top the SPY. I don't see that yet. Does it come? Maybe, etc. Right? So this is how the VIX is set up. Below the yellow, we take the markets up. We take the S&P 500 up today. If the VIX were to reclaim and say do this, that's where we look to short the market today. The market, whether it be the S&P 500 or whether it be the volatility index, and really many other things for that matter, but since this is always what we talk about on stream, I'll just keep it there. The market loves to position itself like Humpty Dumpty sat on a wall. Remember that. That Humpty Dumpty sat on a wall. And you go this way, you over. You go that way, you fall this way. And that's how the market loves to position itself, so that it's not so straightforward, right? It's always like you're walking on a balance beam, and you have to try to understand or try to figure out which way the momentum is going to shift off the balance beam. And it could go either way, right? The game is never perfectly straightforward, which the market's never perfectly straightforward. But you see what I'm saying? Is if the balance beam had a brick wall on the left side, you could only go one way, and it would become too predictable, right? Because there would be no opposite potential. So the market pretty much operates many times like a balance beam, and it will find itself at specific levels, and market participants will watch said areas and said levels and try to determine which way Humpty Dumpty is going to fall off the wall. All right. And then, so yeah, that's it. So this yellow line is the Humpty Dumpty. This is the balance beam. Below, market uppeth. Above, market downeth. And it's just one price point. And that's pretty much it. And now, obviously there's a little more to it, but that's a very simple, basic, probably the best way you can, not stupid. It's not the best way, but it's a good way to explain it. So, right now, Humpty Dumpty's on the downside. The VIX, that is. We never get too optimistic of things that happen in the pre-market, right? Just because the VIX is below a level in the pre-market isn't like sealing the deal. Remember that live trading hours are far more important. And that's not entirely true, but just don't get too optimistic of things that happen during the pre-market session, right? We like to see levels tested in the live trading hours because that's where more volume is at. All right, so just because, so this is kind of leading into that, right? So you see how we broke down the yellow line this morning on the VIX, and now we've back tested, right? Okay, that's the pre-market. If we were to open up, if the market were to open right now, this back test would be, it would, you know what I mean? If you change this to a regular trading hours chart, not a pre-market chart, then that means the price is down here and it has not actually back tested. So if you think of these as two different markets, right? And if you think of it as sharing is caring, right? You know, sharing's caring. Well, right now, we've only given a piece of candy to the pre-market. The other child wants a piece of candy too. So we got to be fair, and we have to give a piece to both, right? So far, the pre-market has done a back test, right? And it's very likely, many times when we go into the live trading hours, you'll get a back test. Sharing is caring. So it's many times you will see that just because a back test or a break or something happens in the pre-market, it doesn't necessarily last. And we then need kind of it to happen in the regular trading hours as well, and then maybe it will work. And that's not always a perfect, system, if you will, right? But it is relatively common. So when I see something like this, I would love for it just to back test and then just break down, right? Because then that just means the market's going to have usually just an easier time going up. All right. Now, if it does need a back test going into the open, then what you're going to see is you're going to see the VIX go up to that line, right? And then it will decide, okay, does the live trading session, market open in real time, does the market then want to reject again? If so, you could say that the pre-market stayed below and the live trading hour stayed below, and now the market goes up, right? Now, as we said before, the market likes to position itself on a balance beam, always kind of keeping people on edge, which is that the yellow line is not only the resistance, backtest, and continuation potential level, but it's also your transition level. So the same level that is used to shift the market down is the same level that is used to shift the market up. Balance beam. All right? So the momentum is always on a shift point. Not always, but that's how algorithms and computers love to set up markets. So yeah, that it's funny because what I'm trying to emphasize is that when using this system, if you will, the VIX could very well be breaking down today, and that can cause the market to go into a long move, right? But at the same time, if it's a fake breakdown, then this is realistically just the start of a new long, like a new long, you know what I mean? So that's how the market is always kind of positioned, and so we'll see how this all shapes up today. So, as we said before, this is where our attention's at right now for the VIX. We're watching above and below that line today for some helpful momentum direction bias, if you will. All right. This is not the be all end all. Okay. So now let's go take a look. Let's take a look at the market now, and let's I'm gonna delete all my drawings off real quick. Let's just move this down to here. All right, so let's look. Where's the 50 SMA on the market? 50 SMA is here. So we know we're still below it. So if you guys remember, well, I know you guys do because, yeah, I'm assuming the people watching this stream probably watched yesterday. What's up, Upside Investing? Good morning. So for those that were probably watching tomorrow, you guys know the market's below the 50 SMA. So I'm going to put a little smiley face on the chart right about there. That is when we told that is when our YouTube stream started to suggest to yield and be cautious on the market, because we're starting to see things changing that could drag the markets into a sell move. And then pretty much now, from here with this smiley face, and now we've said you're no longer long biased the market. It's a neutral to bearish environment. The market is down more. All right. The market is still not recovered the levels that would suggest to us that we're back on the long. All right. We're still waiting for the market to recover levels that would dictate that we're back to a long. All right. This morning, what you've seen, inflation data, whatever data, it's simply just a catalyst to move the market momentumly, or give it momentum, if you will. My brain clearly is not working the best this morning. So all we've seen today is just some economic data that the market simply uses to create a more volatile trading environment. The data and everything that has come out this morning, I haven't even read it. I haven't looked at any of it. I simply just went to the economic calendar, copy and pasted it to give me like a description and a title today for today's video. So I haven't even read it. But what I can see is that regardless of what the data says, the market's moving positively in the upside direction. But it's still not enough to change the structure of the market to be trend positive. Could it? Maybe. Does it? Don't know. But it hasn't yet. So that means we're still in a neutral to negative state on the market. Doesn't mean you can't try to trade up, doesn't mean that you won't be profitable trading a bounce, like you've already seen, etc. Remember, yesterday we said the market can sell all the way to here, and then you look for a bounce. So even before the data came out, we already were suggesting yesterday to be long around 672 for a bounce potential. No data came out, right? We're in a bear move, but we still suggested a bounce. See, when things are in a bearish move, you can have counter trend bounces. That's completely fine. You just have to understand what sort of long play you're involving yourself with. That's where people can get in trouble, is they don't understand the market's actually bearish, but the long move that you've gotten a piece of is a counter long. So what we've seen this morning, from yesterday to today on the market, excuse me, man. What we've seen from yesterday to today on the market is basically a sell-off to a counter-long bounce. The market used the economic data today to basically bounce the market up within a bearish neutral market, and it's not yet positive. And we're looking at the volatility index and its 50 SMA level to help dictate if we can continue momentum in the immediate or if we should pull the market back in the immediate. And then at the open, we're going to use the market internals in real time to see how equities are performing at the open to give us more confidence whether it's going to be up or down in the immediate. It's a lot of things to take in. I know. You're not supposed to know all those things in real time like that. That's why you watch the stream and we do the same thing over and over and over and repeat it over and over and over so that hopefully one day you can wake up and go, we're doing a counter long bounce in a downtrend. Market's not positive. We're using the VIX to determine if we can bounce the market more in the downtrend or if we're going to use the VIX to top the market right now in the downtrend. And then we can look at the market internals at the open to dictate what the momentum looks like in the immediate, etc. All right. So we'll just keep doing this every single day. Just keep coming back, hanging out, watching it over and over and over and over and over. And sooner than later, you should pick it all up. All right. So that being said, I still have some on long UPRO. We still need the market to go into a buy signal before the market's going to do anything fun. Well, have a good long move, that is. Yeah. So there's all that. And let me zoom in a little bit more here. Yeah, so let me do that. I'm trying to get them. Well, I'm trying to get them both like in. Do it like this. That's good enough. Yeah, so pretty much put it this way: if the market remains below the VIX, so down here, cursor. If the market maintains below, like said picture, then this is where we're going to be targeting to the 50 SMA here, right? So it's the VIX's 50 SMA potential breakdown that would cause the market on the S&P 500 to magnet to its 50 SMA. But we need the VIX to break down the 50 SMA. If the VIX says, nah, just kidding, this is a false breakdown below the yellow, and I'm actually going to recover going into the open and turn this back into a long, this is where the market will generally top out right where it is pre-market. Pre-market will turn in like this right into the open. Maybe not perfectly, but to make it simple, is the VIX is sitting on the balance beam. And whichever direction it picks off the balance beam is what we're going to use as the green light to then go take the market up to 678.63. Or stop the market here and roll it back down. So again, for me, it's less about the S&P 500 and its patterning and the way it looks this morning. It's really about the volatility index, and we're going to use the information as best. Sometimes the market moves ahead of the VIX to a degree, and I mean that is true. So it's like it's not like a perfect always indication, if you will. Some of it, sometimes it can be a little lagging, sometimes it can be a little leading. Nothing they're perfect, but that's the generalization of what we're getting at today. Is the levels are key to watch on the VIX, and that can help us determine if we're going to shoot the SPY up out of pre-market and right to arguably 678.63 or as close as we can get, or if we're just going to straight top it now and not do that. And when the market starts to get really close to the moving averages, like you're seeing, let me bring up the pre-market here. Let's do that. Yeah, when we start to get close to, yes, oh geez, yeah. So this is gonna be this is right now is our long target up right now. Okay, so that here on our stream, that is our long target right now, destination for the SPY. Not that it couldn't go higher in the day, not that it won't go higher in the just in general, right? Because we're trying to think in terms of algorithms, which is that we know the market can be bearish below and it can be bullish above. So we don't want to go, hey guys, the long target is all the way up here where I'm circling, right? We don't want to say, hey guys, long target's up here, right? Without first seeing if the market even wants to establish a new structure long above. It could just be a counter bounce back to resistance. So we don't want to be so, like you don't want to be, oh, it's just going to go up to, and then it's going to break out and keep going, right? It might not do that. Hell, it might not even go to 678.63. Just the point being is we know where the balance beam is at. And if the market wants to change structure, it'd have to be above, right? Simultaneously, we also know markets can literally bounce to and reject and stay down. So it's too soon, and the structure of the market doesn't make sense to be targeting all the way up there, at least yet, right? You know what I mean? That's like you're saying, I'm going to run a 100-yard dash even though I have a brick wall that's right in front of me. It's like, maybe your target should be the brick wall and then see if you're able to actually open the front door and then go through the wall. And then you could get up to there, right? So it's just, we have a potential wall to run into, so I can't target past the wall until I break through it, right? So that's how I think we're positioned this morning. And it's all going to be determined based off of the volatility index, whether or not we keep the break down or break it out, etc. Now, most people would not see this, what I'm drawing on the screen, as a breakout or a breakdown. Why? Because there's no, there's no flag pattern on your screen that created a top that you think we have to break out of, right? There's no bounces on the bottom that you think we have to break down, right? The breakout level is right in between the price action. You know what I mean? So, yeah, we have either a breakout and up, which is above the yellow, or you have the, which we already did, which is break down, and we're trying to maintain below, and if we're successful, then we will see the market probably shoot up to 678.63, if not higher or very close to. Again, so we'll just kind of keep hanging out, and yeah, that's pretty much it. Well, that's not it, but, it's a lot. We got 1 minute. That's enough time for me to go downstairs and get a refill on my coffee. I'll be back. All right. Sorry, everyone. And yeah, we'll do a little M1 finance portfolio update in like a little bit. Or what have you. Well, it's not going to be anything special. It's, we're just bought a little more on the dip. But it's such a small account, it's not going to be, meaningful difference, but we could. All right, so we'll just do that. So I'm just going to put a title up here that this is the long target with a VIX confirm breakdown. Long target with break. Well, I can do that. Let's go. All right, so we'll see. I'm going to bring the VIX right here so we can just kind of keep this up on a 1 minute chart. It's a little big, but whatever. And then I maybe should draw on the screen just so everyone's kind of clear. So above, we can start establishing a new structure long. And everything isn't so, direct, right? Or it's going to be whether we stay below. All right, so you see how... So yeah, there you go. So you see how we pretty much stayed below here on the VIX. Now you can see that we rejected, right? And then look at the gap down at the open. So basically what we did today was we used the market, we blasted the market up to the long target, and as a result, it created what looks like the confirmed breakdown. So like we said before, the markets can be somewhat lagging or, not totally connected. So, like I was saying before, it was, hey guys, we got to confirm the breakdown on the VIX so that we can take the S&P 500 up to the price of 678.60s, right? But as you can see there, the market opened, we shot the market up, and that's what ended up resulting in the breakdown on the VIX. You know what I mean? So though all this morning, I'm like, yeah, it's all about the breakdown of the VIX. Can we break it down? And then, so you can see that sometimes it's going to be the market moving that kind of creates the move on the VIX, especially around the open. I'm sorry, I might be going so far into detail that half of this doesn't even make sense. I'm sorry. But there you go. So hopefully that makes sense. There's your breakdown on the VIX. That's what allowed us to take the S&P 500 up to 678.63s. Now it's pretty much whether or not the market is going to sustain, or not sustain, sorry. Let me use my brain for a second. Yeah, we need to, sorry, I was doing something. Yeah, so now it's just, let's just figure it out, which is pretty much whether or not the market's going to stay bearish or it's going to flip bullish, right? So now I would be long moves done. Let's reestablish thoughts and see. Now it's either the market's going to basically top out here, or we're actually eventually going to be, that's pretty much it. It's either the market's topping out or we're going to establish into a new long, right? So I would say that the counter trend long bounce, I would see this as a play, right? So this yellow line down here was our support yesterday, recommending watching a bounce. To this morning, that yellow line on the top is as far as we were looking to take the market. So I would say that this long move is now complete, and we're now going to be into kind of like a little bit of a battle maybe, and deciding if we want to essentially top the market here, stay in a bear market. That's exactly what's going on. It might be too. That's it. Until we establish above this trend and go into a new long, then this is just resistance. All right. So yeah, that's that. Cheers. Yeah. So I'm gonna move the VIX up. So that's there, and then now we got to start. Now this is where we want to start looking at the market internals, right? Because we're basically playing the game of, well, is this thing going to reject? Is it not going to reject? Does the market want to remain bearish? Does it want to flip bullish? Blah blah blah. And just looking at a couple candlesticks may not be able to do it for you on the SPY. So what we're going to do is dial in. We're going to go look at like a 1 minute here. So far, you can see the market's gone up pretty much exactly to the price we said, and now you get your red little pullback. So now what we want to do is we want to look at the market internals, and are they bearish or bullish, right? So if we look at the market internals here, the Magnificent Seven are trading bearish. So there's no way we're going to break out right now. So we're probably going to do a little, well, you can already see we're topping, right? A little bit there, right? So you see how the market's gone up to 678.60s. Yeah, yep. So market's gone up 678.60s. You can see the Magnificent Seven are pulling back. Pretty much unless those are going up, it's going to be very hard to break that market above the level. So you should arguably be skeptical right now. Which is why we said don't look higher than 678.70s for now, because this is how the algorithms are positioned. This is how it works, all right? It's not just how it works, it's just how it works many times, all right? So I would say chill out on the long. We are arguably bearish now because of everything I've already discussed, right? We're only looking up to 678.60. From there, we got to determine if the market wants to stay bearish or if we're going to flip it bullish. We'll look at the market internals for immediate momentum to dictate, is there strength to force a breakout, or is there not enough strength, so then we're going to top it. Right now, there's not enough strength, so we're topping it, okay? Now, I got to do a little bit more thinking here. So if we do end up topping the market and going through actually halfway decent pullback, then I'm trying to figure out where we can target down to. So if we do, in fact, top this market and roll it down, this would be our first, like, somewhat decent target on the 30-minute. And where's the 1 minute? 1 minute's already taken out. That's also the 50 SMA. So we got to run a 50 SMA volume weighted average price down. So our target down is going to be the box that I just pretty much put on the screen. And then our 1 minute volume selling trend is above here. So right now, the box on the upside is our 1 minute counter trend long destination. And if the markets maintain below that, then we can see them kind of roll down. So that's how I kind of look at the market right now for immediate potential, and or it's like this. So that's how I'd read this market right now. And it's all going to be somewhat dependent on how the Magnificent Seven move and the rest of the market. Also the VIX. The VIX is bouncing. And so we don't have a live back test. So I could bounce all the way up to and reject. And if it does bounce all the way up to, then the market would continue down. Okay. So that's the other thing too, is the VIX, and let me pull this up real quick. Remember we were talking about how the market's all about sharing is caring, and we had a back test on the 50 SMA on the VIX in the pre-market, but so you can see there's no back test in the live hours. You see how it's just there and there's no back test of it today? Doesn't mean it has to go there, but there's a good chance it does. And as we take the VIX up for the back test to confirm the VIX breakdown, that should allow us to decrease the S&P 500 in the immediate. And right now, the volume weighted average price of the S&P 500 from all the pre-market participation on the long side is priced about 676. So that's arguably a destination point. And everyone's shorting and selling the market from today's high at the 50 SMA rejection. That's this green box on the upside. So that's pretty much why I have everything drawn the way it is. I know you guys know exactly what I'm talking about, because I know that that's all supposed to make perfect sense, right? Because remember, the stock market is all about finding a bull flag. It's all about the head and shoulders pattern. It's all about, I'm pretty sure that's what it's about. Yeah, look for your bull flags, guys. Make sure you got those bull flags down. All right, so hold on. Little update. You see how the see how the VIX is now at the 50 SMA? So we've effectively took the VIX to the back test. So the computers and the traders that are just thinking of the VIX back test as the reason to be short, their trade would be done now, right? So you see how the market is starting to wick a little bit there?
Not that that's going to last, but you see how there's a little wick on the S&P there? That's because we just hit the target on the VIX, right? So you can see we just came up into the target, right? So nonetheless, we're still probably going to take this market down to where I said. Actually, we might go a little lower now because those are volume weighted average prices. They probably adjusted a little bit. So let's just double check. Sorry, I'm just trying to, and they did adjust a little bit, but I'm just going to do this, like that. Alright. So again, like I said, our pullback target's still like these green boxes on the downside, but we're also using the VIX. The VIX back test just completed. So if the VIX wants to remain in a downtrend, this is where we're going to bottom the market. So it's still kind of up in the air if this is going to become our bottom or not. It's all dependent. Now, like I said, if the VIX rejects and goes down, this turns into a bounce. It doesn't look good. I don't think it's going to bounce, like hold. But if the VIX breaks out, then the VIX is literally starting a breakout, and that gives us a catalyst for the market right here for it to go down. Right? So that's how you can look at a move that's going down and be like, well, is it going to keep going down? Well, is there a reason for it to keep going down? Sometimes there is, and that could be with a breakout on the VIX. So right now, what we're seeing in real time is your stock market's going down on the day, selling pressure, and right now, we have the volatility index priced at a breakout level. If for whatever reason the VIX wants to break out, what's happening in real time is like someone playing a video game typing in a special code for a power punch. Like the power moves you can do in like Mortal Kombat and stuff. Like that's what it is. Like it's a catalyst that could be happening right now. And if so, that would be injection of fear into the market. Algorithms in real time will start reading, oh, VIX over X price, fear increasing, right? If fear is increasing right in the middle of a pullback, does the pullback stop or does the pullback continue? Many times, it would continue, especially if there's a new signal of fear that's entering the market. So, what I would say is for our short-term analysis, the trade on the bearish side of the move from the top at 678, it's pretty much complete. Like, job well done. Now it's about whether or not it continues. And that, my friends, is going to be built off the volatility index now. All right. So we already used levels on the S&P 500 to top it, levels on the S&P 500 and the VIX to dictate where the pullback would go to. That trade, that whole analysis, complete. Now it's what's next. What's next is, do the market internals continue to be bearish? And if so, does the VIX break out? If they don't, then this is going to be a little short-term temporary bottom. So for continuation of the sell move, market internal state need to stay bearish, and your volatility index will need to break out, which I don't know if either of those two things are going to happen yet. But I'm kind of leaning still to the sell side a little bit overall. But I can't do much better than that. So I'm going to say right now, everyone just be happy with predicting the largest globally traded ETF in the world up to, top it, and pull it back to. I mean, that's pretty good stuff. But remember, you must study bull flags and bear flags, and you look for patterns. Remember, you look for patterns. You look for doji candles. You look for evening star bearish Harambis. Rest in peace, Harambe. Was that his name? Harambe. I think that was his name. So, now that we've kind of knocked out a lot of the detailed stuff, we'll give some generalization. The market is still bearish. We are not in a bullish market. We will change to bullish when the system tells us to. Or when this YouTube stream tells you to. Man, look at that receding hairline. That is crazy, dude. Look at that. That's lit. You know what? I think I got a breakout on my forehead going on. That bad boy's got some straight momentum and volatility in the wrong direction, let me tell you. Look at that. Dude, that's going to be our new hairdo for the YouTube stream. That's why people come. Look at that. Yeah, we're gonna, oh, but then look at that. Let's go. Look at that. You can go from looking like a straight goof to the front cover of a cologne advertisement. When does it confirm that SPY 30 SMA and we were bearish? After VIX only pulls up a little bit over the line went. Yeah, I don't understand the question good enough. I know we're talking about a lot. Yeah, I mean, there's multiple ways to be bullish and multiple ways to be bearish. You know, so let me read it again. When does it confirm that the SPY ticket, see, that doesn't ticket 30 SMA and we are bearish? Well, I guess it would probably be, let me take you to the SPX. So back here, 1 second. It's not loading. That's great. Take it, yeah. So I'm just going to delete all of this stuff real quick. Dang. All right, so essentially, we've been bearish the S&P 500 from there. So to answer your first question, well, your first question is, when does it confirm the SPY may be bearish? Really, the market has been bearish since where that arrow is pointed to. All right. Now, throughout this entire bearish move, there's moments where the VIX is then used to dictate whether we maybe bounce it a little bit or continue it down within that bigger downtrend. All right. Today, the S&P is right on the 50 SMA, right? So that's our over under. That's why I said that would be a long target, right? Right there. Doink. Because that's just how algorithms think. So we are above, we can be bullish. Below, the market is still arguably in a bearish move. Now, it could change, but that's just it for now. Yeah, it touched the 50 SMA and goes down SPY. Perfect. All right, so let's talk about that. So what you're talking about is, how do you know if that when the market goes up to the 50 SMA, if it's going to break out or it's going to reject? $1 million question. That's what everyone wants to know. That's what I want to know. If you can tell me how to be better at knowing that, then please do. But you're asking the same question pretty much everyone on planet Earth asks when it comes to trading, investing, buying, selling, anything in the stock market, which is basically what's going to happen next. All right? It's not, oh, is it going to reject? It's just what's going to happen next. As we relate it to specifically what we're doing, it's how do we know if it's going to reject the 50 SMA or if it's going to go above? All right. So one of which would be the market internal. So let's time this up. Ready? So let's look at this. So we hit there at 9:32 a.m. Well, 9:31, 9:32 a.m. is when we popped the S&P 500 into the 50 SMA over under right there. All right. If we go look at the market internals at that same time, all right, we're going to bring this chart up here. All right, so where's 952? Right there, right? Well, 951, 952 would be these two top candles. So at the time that the S&P 500 market, whatever, is running up into our 50 SMA long target, potential breakout, and potential resistance pullback area, we notice that the candles stop being green on the Magnificent 7 ticker and they start being red. The better way of explaining that to you is the S&P ran up to its resistance level, and at the time of it reaching its resistance level, the biggest market cap stocks in the stock market started to trade bearish. If the biggest market cap stocks aren't going up, generally the market is not going up, right? So as the S&P runs into a resistance level, we confirm potential resistance by looking at the drivers of the price action of the market, not a candlestick pattern necessarily, right? So the S&P 500 is the car, right? The Magnificent Seven is the fuel, many times. If you have a car and you inject fuel that's good, generally it starts and it can go. If you have a car and there's no gas, it no go. So that's what we try to determine in real time, is as the S&P 500 goes to specific areas that we like or determined, we then evaluate the gas. Is it old? Is it stale? Has it been mixed with oil or water? Is it muddied? Is it going to combust or not? Right? So a lot of the times it comes down to making sure that your eyes are in the right place and they're watching the right things at the right time. And to figure out how that ecosystem all works in real time is what's really challenging. That's why the market is such a pain in the ass, because it's not designed to be easy. And there's so many different things that you can watch to gain that edge that it becomes challenging, right? So, and then to touch on that, we do use the volatility index to predict price, right? We definitely use the volatility index to predict price. We used it today, right? So it's not only looking at market internals, it's not only looking at levels on the S&P 500, but it's also understanding the trends of the volatility index, where we spread fear and optimism into the market. Fear drives price down, optimism drives price up, right? So not only how is the, it's like not only, are we, the S&P 500 is the car, we're looking at the destination, we're the roadmap, right? Google Maps, so we got our car to drive in, the S&P 500. We have Google Maps, that's our direction of, where we think we're going to drive the car to and from. Then you have the gasoline for the car, that's the market internals, right? What really drives the market behind the scenes, what goes into the car, right? And then we have the weather. The weather is the volatility index, right? Do we really want to start our road trip in a snowstorm, or is it rainy, right? Are we going to be going out optimistic, sun shining, or is everything looking fearful and gloomy, right? And we combine all that into one to hopefully set us on the right path when we start our road trip for the day. And that's basically all we're trying to do every day, is read the market in a way that hopefully paints relatively a decent picture of where we're going and why we're doing what we're doing. Right, so now that the market's open, we've driven the price up to a said level, we've pulled the market back to the levels we said we could pull back to. You can see that the market is bouncing. Remember, just a little bit ago, we had suggested that we're like, that's it. We're not suggesting like you should be too much more bearish than this for the time being. Like, that's as much as we can gather, right? Because we just want to see now what's going to happen. Is the VIX going to break out, or is it not? If it doesn't, we're not going to go down anymore. Wait, hold on. Where the heck? Oh, no. Don't be lame. There we go. So, yeah, I remember just a few minutes ago, we basically said the market on the VIX has to do what? It's either got to break out or break down. So this is when I drew that back there, right? So now look, we did this. And now we're kind of under. So if you take away my drawings from earlier, this is what the market ended up doing, right? It did not reject right there. It did not just break out and go right there. I did it as a general term, right? It's either got to break out and go up for the market to keep pulling back. If it does a false breakout or it breaks down like this, then what's going to happen is this turns into a 30-minute rejection. So go to the 10-day 30-minute. All right, so you're looking at the VIX. Now, the VIX is not over the 50 SMA, so that means that the fear is like not bullish, right? Fear is not, we're not on the positive side with fear, right? So like the market isn't really fearful right now in the VIX, right? All right, so if the VIX isn't fearful, then should the market be going down? Not really. You know what I mean? It could, but it just no. All right, so then you ask yourself, right? So look at the market on the VIX was right. Market on the VIX was positive. What happened? We pulled the markets back the past couple days. Today we gapped down the market below the 50 SMA. We back tested now, and now we're below. So fear is leaving the market a little bit. It could change, but for the moment, fear is not truly in the market. It's not a high-priced VIX. We're only at 16, and the market just dipped back below the 50 SMA. So the markets aren't extremely fearful right now. And now if you go look at the market and its price action today, and let's just kind of zoom out and look at, say, like a 30-minute here, right? What do we say? The market's not really fearful today? And look at, so far the market's on a 30-minute, it's green. You know, if you look at a 10-minute, you know, it's arguably still like green, or 15-minute, whatever. If you look at the day, it's a green day, right? So now you can see, oh, so the VIX isn't really fearful. It could change, but for the moment it's not. And sure enough, we have a green day right now, at least printed. It's green on the 30-minute, you know what I mean? Though we are still below the 50 SMA on the market, the VIX, or the SPY, right? Think about that. So you can see now how we're using two markets. We know that we're not positive on the S&P, right? We know we're still below trend, but we also know that the VIX is not currently confirming the downtrend on the market, right? Though the market's in a downtrend, the VIX isn't saying be fearful. So should I be extremely fearful of being in bearish territory right now in the market? Or are these potentially early signs that we're trying to shift from what is a bearish market to potentially a bullish market? If you're in a bearish move on the S&P 500, generally speaking, the volatility index should be confirming that with fear. If the volatility index is not confirming it with fear, then a lot of times the downtrend may be ending or changing. You know? Many times, not always, but yeah. So I know that's a lot to take in. That's a lot to think about. Again, I watch the same system every single day over and over and over and over for years. And after you watch it over and over and over for years, you just can't see it any other way. I can't. You know. And arguably I don't say I don't want to, but I mean, you know, pretty much woke up pre-market, said price of the market's going to go here. And then it's going to arguably top here. And then it's going to pull back to here, right? And then it's not going to go down anymore. I mean, that's literally ping-ponging the market. Top to bottom, top to bottom, top to bottom, right? And you're not supposed to be able to predict tops, and not supposed to be able to predict bottoms or see those. Granted, if I didn't have emotion, I could make, you know, $1 quadrillion. But, you know, that being said, you know, there you have it. So cheers. Watch the same system over for years, and maybe one day you'll wake up and go, yeah, S&P 500 is going to trade up to $670 and some 80 cents, and it'll happen, right? So we're going to go back to some generalization stuff, which is, now that the market's been open for about 30 minutes or so, or, yeah, what? Hold up. Am I tripping? What am I even saying? Wow. The market's been open for like, really? I am brain farting. Whoa. Yeah, for a moment I forgot what time the stock market actually opened. Yeah, so anyways, we're in a situation where we're pretty much just trying to decide if the market's going to establish a new long, or this is just going to basically still turn into a topped market. Like I said, until the market establishes above the 50 SMA, we're just still in a bearish market. And actually, we should run the 50 SMA volume weighted at, okay, yeah. And that guy there. Yeah, we're still not, like, that's another thing too, is if you look at the volume weighted average price of the market, it's all right here. So even if we did get over the 50 SMA, we still just run into volume weighted average price potential resistances above that could still keep the market down. And even if you did creep over this 50 SMA a little bit, you still wouldn't change the lower low, lower high structuring just yet. So if you look at like from here to here, it'd be like pretty much, I mean, there's other ones in there, but it'd be like that, right? So it would have to, you know, like it still has to be like above that for a new 30-minute chart structure change anyways. So yeah, there's still quite a bit of work the market's going to have to do to get back to the long side fully. But that's kind of one of those things. The market's right on the 50 SMA. You know, if the market plays nice, they pretty much put it into a buy move. If the market is not playing nice, then what's going to happen is we're going to, again, eventually reject here. So that's what the market's trying to decide, just in general, is if we're going to turn this into a long here or basically go through another rejection. It might be a little too soon for the market just to kind of rip up here. And also, we did a gap up, so I'm assuming we did our 161 extension already. So if we take a Fibonacci and we run it from the open to the previous day close, actually we haven't. That's good. Oh, that makes me far more happy. Yeah, that means we have the potential for a run all the way up to 6,813. I wasn't really thinking about that until just now. But we would need the market to at least get love over the 50 SMA. So pretty much if we get acceptance over the 50 SMA, market will then target up somewhere to like 6,813. But like I said, this is the 50 SMA. So if we start zooming in and looking at a 1 minute, this will become a little bit more clear. Well, maybe if the freaking chart overloads. There we go. So, whoa, why is there so much? Well, I don't really want to have that box on there. I don't need that. We'll just redo some. That's fine. Where's the thing at? That is just. Oh, it's there. When did it go there? Yep. Yeah, so pretty much it's all about, yeah, it's just, I've already said it too many times, I feel like. Yeah, it's just all about the market getting established over this 50 SMA. If so, we can definitely pump this market up, arguably. So, yeah, if we can get over 50 SMA today, even into tomorrow, and we should take the market to about there. All right. And then, but yeah, I mean, it's all dependent, right? Because right now this is the 50 SMA. We're on the 50 SMA, so it's in general it's this, right? It's either up or this is the start of a downtrend, right? And that is not to be taken literally. Well, kind of, but it's not going to look like what I drew on the screen, arguably. Whatever pattern it wants to form, it will form. But yeah, that's that. Oh. Nice. Weird. Bum 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 bam. Stay away. Oh snap. Let's see. Let's bring up our little. Oh, wait, hold on. Ah, well, I was hoping. Oh, come on, Silver, let's go. Get up into 70, 80s, boy. That would be nasty. That would be nasty. Oh yeah, baby. We're about to crush. All right, we will bring up. Yeah, I don't think there's anything weird on here. Yeah, sure. Anyway. So here is the M1 Finance account for our YouTube stream. So I've made some adjustments. I'm probably not going to use. I already have a Roth IRA, so like I started this one. I was like, maybe I'll do 3 accounts. And I'm like, there's no point. So I'm going to eventually remove this Roth here. We're just going to use 2 non-qualified accounts for this specific thing. So we have the simple DCA strategy and the smart money portfolio strategy. They basically started just a couple days ago, or like last week or whatever. So smart money portfolio that will pretty much on-go with this stream for funsies is going to be some low-cost stuff, pretty straightforward. Again, this is like your very basic. Anyways, so yeah, pretty straightforward. It's going to be a 60. Looks like I got 60, 15, 15, 20, or sorry, 10. So this is going to be a mix of pretty much broad market-based ETF with some bonds and some international exposure, emerging markets, if you will. So again, United States, bonds, international funds, international fund. That's it. And then one day, this is actually incorrect down here. Maybe I should change the description of that. I'll do that in a little bit. But one day, what I'll do is I'll kind of do an outline or a write-up, and I'll figure out a way that best makes sense to post that stuff in the description so that you always kind of have a resource or a link that you could go to get specifics and read up on kind of what the portfolio is on the stream and kind of how I go about using it myself. This is going to be a form of a dollar cost averaging, standard deviation, buying, the SMA system buying you're seeing, and so on and so forth. So this portfolio does a little bit more than just dollar cost average. It dollar cost averages with an emphasis on some degree of timing, which is when things are on sale more, and or when things go into negative trends and or start buy moves, etc. So and then also the day and time of day of investing. So beginning of Mondays are usually historically the best days to buy into. Arguably, buying at the end of the day too has been historically good because most of the gains of the markets are actually put on overnight. Many times, midday buying is not as good for portfolios as the beginning and or the end of the day buying. So all of that's kind of thought into and constructed and used when doing this, and as we continue to do these portfolios on the stream here with you guys. And then the DCA one is just a straight simple this one's just a straight simple dollar cost averaging portfolio that it's not supposed to I'm not supposed to be thinking, timing, anything like that with this one. This is supposed to be like super generic for the average person, not trying to time anything, has no additional knowledge of the market, just to see how you would end up performing. And also for myself against my own systems, it'll be interesting. So that's what that is. And these are, these will be fun kind of case studies as we go through our streams each day.
And then obviously note that these are not necessarily my main portfolios. I have real estate and other things, so these are simply for our YouTube stream and for myself, obviously. But so there you go. Again, we'll just keep building these over and over and over. There's no rush for me to make these massive accounts just for the purpose of YouTube. So don't get all jazzed up thinking that we're just going to blow these accounts up into huge valuations very quickly. I already have bigger portfolios that need far more attention than this. So this will be great for case studies and stuff. So anyways, there's the update. Basically making no money. Invest, guys. Make no money. So there's a portfolio update for today on M1. All right, so far the market does not want to break out. That means the market's just basically not ready to go into a buy move. That basically means there's no Santa Claus rally for the moment. Dang it. One second. I got a lot of bookmarks. Where the heck did that go? That is not the one. That's weird. All right, now to the larger portfolio update. So I did snip this, count stuff, whatever. So this is company portfolio, 401k, qualified accounts, etc., tax deduction purposes. You get the point. We're up 28,000 or 28,000, 28% or so year to date. Which again, a lot of those gains you can see here. Well, these are non-classified or other non-classified. Basically, that's going to be a lot of gold, silver right here. So a lot of my account appreciation this year has been built off the back of the gold and silver boom. I own decent amount of short-term bonds. I am not as long bias equities, as you can see. So I've been leaned heavily gold and silver, metals markets, bonds, and then less equity exposure, because I think I'm smarter, which I probably am not, and which is that I think we're going to see negative returns for the market leading into 2026. So I've been somewhat trying to be relatively positioned for that. So probably going to be doing a rebalance of the portfolio soon and changing some things up.
But I don't know what the return is on the market this year, but it's not 28%. It might be like 17, maybe 16 now. Could be wrong. I can figure it out in a little bit. So yeah, we'll do a rebalance on that pretty soon. But there's that. Short-term Roth IRA trading account with you guys is still up. It hasn't gotten over 40% this year. It's still going to be just around the 30%. Haven't really been able to put on any good winning trade gain in the short term as of recently. I haven't really tried to trade any penny stocks or things like that. And then kind of just been waiting on the next buy signal for the market to try to get a piece of that, which I was hoping was going to come for the Santa Claus rally, but so far Santa's just thinks we're all little bad children right now. He hasn't brought us any presents. So, yeah, we'll just have to hopefully get a Santa Claus rally before the end of the season. So yeah, I'm still Roth IRA, small trading account, going to be sitting right around. That's, again, what I trade behind the scenes on this stream is only going to be up some 30% now. I was up, I think, about 35. I think I'm going to be in up like 32 or 33. I took a little bit of a loss the other day on a trade. Set me back a few percent, unfortunately, but this is what it is. So I was really hoping we were going to get like a Santa Claus rally or something so that I could hopefully put on a decent trade on the market and then maybe get another couple percent out of it before the end of the year. But I don't know if it's going to happen. Well, I hope it happens. I don't know. We already know it's not happening right now, obviously, because we've already mentioned the long target, and then the market would have to be above that to flip to a bullish market. So remember what we said. Remember this morning, hey guys, this is all just a counter trend bounce back to the 50 SMA. Only above do we establish new market structure long. If not, this basically becomes a top. Right? So, you know, everything's happening as we've discussed. It's not like anything's happening that we don't understand. You know, it's all very normal. We see this stuff repeat all the time, to a degree. We are. Oh yeah. By the way, well, yeah. I mean, market VIX. Obviously, you can see the market's rolled over a little bit from that high. I'm gonna delete a lot of this. It's getting a little busy. I'm just gonna clean this up real quick. I'm just gonna throw our 50 SMA level back on like that, pretty much. And then we'll just put back on our text as we normally do, which is bullish above, bearish below. Just like that. And maybe we change that to say red. Ooh, scary. So yeah, real quick, what's happening? See how the market's kind of going down again? It's not really looking great, etc. What's happening to the VIX? So you see how the market looks. You can just see the price action of the market. It's obviously going down. So obviously there's like a little bit more fear, if you will. Let me double check something else here. 21 hour. Yeah, okay, makes sense. Yeah, 10 to 30 minute. Gotcha. Right. If we look at the VIX, we can just see that just in general, right? Let's go to the 1 hour too. So if you see the 1 hour still just pretty much holding, right? So we're pretty much just basically holding the VIX right now, right? And the market is kind of topping, etc. So all this means is that the market is not ready to go into a buy signal. The market is not ready for a Santa rally just yet. If we're to get one, we have not triggered the algorithms and the market makers to restructure price to the upside. It just hasn't happened yet. The VIX is not confirming that we should be extremely long bias, that we should be bouncing, just all these things, right? It's just, we're just not quite ready. So we're just going to basically sit and do the same thing we've been doing for the past couple days, which is keeping everyone on the right side of the trend, right? And then when it makes sense to flip to the longs, then we'll go back long, right? I still have a little bit of a long on UPRO. It's not doing great. Just been sitting, hoping one day this thing eventually goes up into a Santa rally, right? And so this is a perfect example too, right? So the past couple days, I've been long the market even though I know it's bearish, right? So like this, and I haven't done this in a while. Normally I would never be long the market the way I have been in this bearish move because I know it's bearish, right? And all I have to do is wait for the market to go back to positive and then I could just be long again. But I'm like, I feel like we're going to have a Santa rally because I haven't seen us not have a Santa rally since like forever, it seems. So I'm like, well, since I feel like I know that's going to happen, I don't really care. I'll just kind of keep buying into these dips as we go down, assuming that we're going to transition and go back to positive at some point. And if it works, great. But if the market does, in fact, just keep staying in a downtrend, then I just keep buying into a downtrend that's never going to work, right? So that's always your inherent risk, right? So this is the first time I've really kind of bought like this in a while. The last time I did was when the market went through its correction, which was back here. This one was too obvious, though. Yeah, the last time I was just buying straight lows without waiting for a buy signal was this bottom here. This was the last time I did anything like that. I was doing this. The only reason I'm doing it now is because I figured we get a Santa rally, but if I was wrong, then it's just stupid, right? So that's what I'd always say is, for the average person, even myself, you'll always be far better off in terms of like a trade, a swing trade, like trying to catch momentum, is by not trying to average in lows like I've been doing a little bit. And you just wait for the market to go long, right? Because think about it, right? Think about buying low, buying low, buying low. Great, market pops up, but it hits 50 SMA, doesn't flip bullish, and then just stays down, right? Then you basically just bought lows in a downtrend that's still a downtrend, You need the market to flip positive for market makers and structure to change in the market and algorithms to get force push long algos going. You know what I mean? So that's always your inherent risk if you're buying without being in a buy signal for that matter. That's funny. Oh, man. What time is it? 10:22. We got 38 minutes left. Oh, boy. Oh, is the market going to give us Santa's rally? Is Santa going to come just absolutely dump his gifts all over us? Stay away. Oh, the market is pumping. Man, oh man, oh man, oh man. Come on, baby. Give us a furious pumper magoo. Break us out, baby. And let's just go absolutely ripping face all the way up to 6,832 smackaroos. That would be absolutely lit. Is Santa coming to deliver his gifts for the pump? We shall see. We shall see. Are we transitioning the market positive here? I don't know. We shall see. Because you can see, right, the market's now over the 50 SMA. Again, the market is always just super simple in that regard, but ultimately, the SPY is now over the 50 SMA. So that pretty much means if it's going to work, it's going to have to maintain above. And if it does, then great, we might start a buy signal. And if so, we might pump the markets leading into Christmas. I really hope so. That would be great. But I have a feeling it's not going to be the case just yet. We'll see. Let me actually do something else. Let's to stay away. Also, we know that we gotta get over. So this is going to be object number 1. If we start to clear the volume weighted average price levels, then we might be in business. So we need to get above that one there. And then we would need to get above this to this. So this would be the next one. Yeah, I was gonna say, like, pretty much the true pump starts happening over like the like right now is where we could start moving, but like if we're really gonna start squeezing short sellers, it's gonna have to happen above here. We arguably just triggered a move from where we're at to the next zone up. So if the markets really get love here, then we might be able to run this market up to like 6,800 to 6,807. We'll see. You know, it just depends. I mean, that's the next level up. It just, how does the market want to do it or not? Really, we'll see. Well, let's see. Let me think. What's today? Today is Thursday. So what's our calendar looking like? So Thursday. Then tomorrow's Friday. Obviously. Christmas is on Thursday. So what is it? Hold on. That's funny. All right, so the market's going to be closed, obviously, for Christmas. And it's got an early day Wednesday, so that gives us today. That gives us tomorrow. 2 days of next week. Christmas Eve, short day. There's not a whole lot of time left for this market to turn into a buy move prior to Christmas. So, if we are in fact going to do some sort of Santa Claus rally before Christmas, it's got to happen here in the next couple days. Maybe it comes after, I don't really know. But, yeah, there's not a whole lot of time left. But with there not being a whole lot of time left, we're starting to transition the market positive today. So if we're going to do a rally before Christmas, it would make sense for it to start now. So I'm buying up a little bit here on the market. I bought some more because we're getting over the 50 SMA. The VIX is currently below its 50 SMA, so fear's kind of out of the market a bit. If we're gonna get one before, Christmas, I mean, what better time than to start doing it when the market's going over the 50? We might need the market to kind of, play out a little more, but we'll see. So I'm adding some long because why not? We'll see how it goes. But like I said, there's still quite a bit of stuff we got to get above if we're really going to get a nice rally out of this market. Basically, if we can start getting the market, let me go to the SPY because everyone knows the SPY price is better. But let's see. I hate adding long a high top like this, but sometimes we'll break the 50 SMA and just go. So it's just kind of one of those things, I hate buying into such a high move, but, if the market wants to do a rally prior to Christmas and use this break, then it's just, you're not going to get much more. Yeah, so ultimately the market on the SPY has to be over $680.07 or so before we're really going to trigger off a really nice long move. And when I say what I mean by that is getting over the 50 SMA like we are right now. I'm long biased because I just bought some long, right? When I say I just bought some, I've been buying some dips and playing around, but I just actually added up, if you will. I'm like actually putting on like kind of risk, if you will. So, and that's because we're getting over the 50 SMA, and I'm not willing to not trust it because it's just Christmas is around the corner. If we're going to get a Santa Claus rally prior to Christmas, this is probably it. All right. And if it's not, okay, well, maybe it's next week. And if it's next week, then we'll say the same thing, whatever. So right now we're getting over the 50 SMA, so we're kind of in this building phase. But if we're going to really pick up momentum, we have to squeeze the short sellers out from the previous selling. That's where the real moment. So we could be in the building phase right now, but we need to squeeze the shorts. And now in order to do that, we have to get the price of the market over $679 and some change. So if there's any market makers in our stream that have the power to do that, can you please do that? Because that's when the shit's really going to pop off. All right. And when and if we do that, as it relates to volume weighted average price targets, we're going to be looking to the price of $683. So if we can break out the volume weighted average price of the previous sell move and start squeezing shorts, then we're going to take the market to $683. The problem is that arguably 680 is still the previous sell signal volume weighted average price. So it's an over under, which basically means the long target from the market is from the current 50 SMA to now $679. That's the playing field. So just remember this morning how I'm like, hey guys, I'm not going to tell you to go long more than the 50 SMA because we have to get there, see if we can get through there, etc. But once we do, we can start discussing new targets. So now that we've cleared the 50 SMA, the new target is 679. And it's going to operate the same. Once we get there, we have to see if the market's willing to break it out or if it's going to have resistance, right? So right now we're kind of what I think is we're on the stretch from 670, 860s to 680 right now. All right. And now over the next couple days, if it's tomorrow, I hope we get a force up Friday. That would be nasty. Nasty little Santa Claus force up rally Magoo. So like I said, right now we're kind of in the building phase of this long, it seems. And if we can start clearing 680, this is where we'll squeeze short sellers and we can blow them up all the way to 683. And that is definitely, that sort of move will grab the attention of headlines. And I can guarantee you they're going to go, Santa came. Santa Claus rally came. Look it. He's here, everyone. He took his big old red sack and dumped it on your forehead. So, come on, Santa. I got to get some more gifts this year. So that's what we're looking for. And then remember that we do still have, I don't know how that relates to the SPY though. Let's see, 683. Oh, no shit. Well, that's 680. And the other thing too is today's gap up on the SPX and its 161 gap extension target. Let's see where it lines up with the sell signal volume weighted average price upper distribution. It's not even. So even the 161, oh snap. And look at, we're already taking out the sell signal VWAP of the SPX. So arguably we're on the SPX, shorts are getting squeezed. So the levels sometimes from SPY to SPX are a little different. I use them both, but the SPX in theory, I mean, obviously you can see shorts are getting squeezed, right? You can see, look at the long move. Like obviously, like the long is bullish right now. It's squeezing up. Like, you know, someone's getting squeezed, right? Probably well, you know what I mean? So anyways, we're getting over the sell signal VWAP on the SPX. So at least shorts on the SPX in that sort of strategy concept, they're getting squeezed, right? Now we want to get over 680 on the SPY. Did we? It's populating. We did. Okay, even better. So now in the immediate, you know, for things to keep progressing easy, you basically need the market not to reject, right? If we're going to have an easy flowing, ripping move that continues today in general, then, you know, however the market forms up, it forms up, but you need the market to now sustain You need to sustain this price. So whether it be like a simple 1 minute pullback and continue, great. Whether it does this and then comes back, whatever, right? The next big move for the market can only really take off and go. Oh, we might do an SPX pullback too. So we might shift the SPY down to do an SPX confirmation. That's a possibility. But anyways, the reality is we just, for the market to keep being awesome, we just need to keep going up. And we're getting to the levels where short sellers that have been playing bearish for the past week, their butts are puckering up right now. They're getting really nervous. Now, I'm not entirely sure who's going to fully win the battle yet. We hope the bulls, right? Obviously. But right now the bears are at a specific point where they absolutely have to start holding resistance, or else they're going to turn themselves into a forced squeeze long move that could take them as high as $683. 684 actually. Granted, it would be a little crazy for that move to happen all in one day. I've seen crazier things. I have seen that happen before. So I'm not going to suggest that's going to happen, but if it does, that would be nasty. But the likelihood is that it doesn't, and maybe this has to progress into tomorrow, maybe to next week. We'll see. The market always does whatever it wants to do, So anyways, we're just going to keep rolling up the long. Like I said, I was just bought in some more, so I'm hoping I'm correct. And I've been waiting, right? We've been waiting all week, now that the market's over the 50 SMA, I'm not going to not buy into the market, even though I said it, like, you can't be sitting here waiting all week for the moment, and then when it happens, be a little Sally, you know what I mean? Now, what we're in, this thing just needs to progress in the manner that we want, right? And so far it looks good. When I look at the chart and I look at the candles, it looks good. That doesn't mean it has to keep working, but at least it looks good. That gives me comfortability. But man, I want nothing more than to squeeze the shorts out before Christmas, give them an ass kicking, boost up everyone's like, you know what I mean? Like market makers, like whoever, whatever, universal juju, like, help the world. Give people money before Christmas, all right? Don't be dumb. People need it right now. Inflation's high, right? What better thing than to screw the short sellers over for at least a couple days? And then if you want to dump this stuff again, sure. But at least give everyone, a little happy-go-lucky feeling going into Christmas. Just to add on top of everything we've been saying, look at the volatility index. So you see how now the market, let me zoom in. So you see how now the market is over the 50 SMA and the VIX is now below the 50 SMA? We would say that makes sense, right? We see that the market is turning positive and the VIX is turning negative. That's confluence, right? That makes sense. Does it have to stay that way for forever? No. But what wouldn't make sense is if the market was breaking out and the VIX was breaking out. Right? Then it would be like, well, wait, why is the market breaking out and the VIX breaking? Like, one of them has to be wrong, right? But when you see the market breaking out and the VIX breaking down, that would be like, oh, like the market's kind of moving in unison. Like, that actually makes sense. 2 + 2 = 4. Okay. Now, just because 2 + 2 = 4 doesn't mean that the next problem is going to be 2 + 2 = 4. It could be, well, whatever, who knows? Like, we just needed to keep continuing. You don't know if everything's going to always work, but in the real time, we could read that the market makes sense. There's confluence. VIX broke up, market broke up, VIX broke down. Cool, that makes sense. And then we would also assume that no one's hedging volatility right now. So if you look at the VVIX, right, if you look at VVIX, you can see that there's no one hedging for tailwind risk. So it's not like the VIX is breaking down, market's breaking out, and then people are still hedging volatility, right? Meaning that there could be something down the road coming, right, that we see. So it's not like the markets are disconnecting from people that are hedging volatility. The hedging of volatility is broken down, fear has broken down, and optimism appears to be slightly coming back over the past hour, if you will. So all markets to me are moving in unison right now for hopefully the long to continue. Again, I've been wrong before, like I said, and when I say long to continue, like when I get a snapshot of the market, it's like everything's moving in unison. Cool. Doesn't mean that it can't change. As we've already said, we're coming into a massive, well, I don't say massive, but yeah, we're coming into a big over-under. And actually, I need to do something else. I need to run the anchored volume weighted average price on this move. Because this, excuse me, see that? See, all right, here's another way of explaining it, ready? So you remember how I'm like, hey guys, we're coming into the sell signal VWAP, and if we get over this, we can squeeze out all the short sellers in a mega move, right? Right? Like, that's one way of looking at it. I'm using the anchored volume weighted average price, and it's just giving me a horizontal line, right? Or I could take the anchored volume weighted average price, anchored VWAP, what is that? Volume profile, sorry. I could take the volume profile of the last sell move. And what's that tell us? Look at the peak volume. We're right at it. Hence, we're right at the inflection point of the volume trend that's been established for the past couple weeks as we've been going down. So we're knocking on the door of everyone who's been short or any volume that's trapped short. The objective of our trade and the bulls and the Santa Claus rally is to get over that. And then what's going to happen? We will squeeze this market like this. Like that. That's what's going to happen. That's what's going to happen if it happens. You know what I mean? So that's where we're at. We're at a big point in the market, right? We've gotten over the 50 SMA, so that's long. But we're below the volume shelf that needs to break to squeeze a short move or to really pick up the momentum, right? So there's always these different phases of the market, right? You have SMA strategy, there's volume strategy, there's Fibonacci strategy, right? And it's understanding how all these fall into place in real time that kind of gives you that extra edge, right? See, if someone only looked at, say, the 50 SMA strategy, like I always preach, then you would say, oh, the market's along, it's a done deal. No problems, no questions asked. No. You're still below the key volume trend of the last sell signal in the market. We need to be above that to really squeeze the market long. So, we've done a good job at bringing the market up over the 50 SMA. Now is this new attempt, this new buy signal, that's it. Is this new volume that's coming in over the 50 SMA strong enough to beat out all of the volume of this previous sell move, right? Think about that. This volume shelf you see right here, that is comprised of all of this sell move below the 50. What we're doing today, right, is this, right? So, 1 second, let me delete that. And this would be like, geez, sink or swim. I know when I'm getting on a roll, you want me to stop teaching because you're like, you're just giving too much away. Stop it, Connor. That's what happens, dude. When I'm on a roll, my computers and shit, they're just like malfunction, too much goodness, malfunction. But so like this is what's happening, right? What we're doing right here, this little long move. See, we're over the 50 SMA, so we'll just say that's Team Bull coming into the market. So Team Bull has just entered the game. Is Team Bull strong enough to beat out all of Team Bear? So let me explain it like this. So ready, I'm going to take a box. We're going to go like this. This is a box. That right there is Team Bear. That's what we're battling. That was Team Bear, and now this is Team Bull. Right here. So far. And I'll change that box to green. And maybe I'll change the border, middle, background. Background is going to go to greenish. All right. So there you have it. That's Team Bull. All right. So think about all of the volume over the past week. I don't want to say it's all bearish, but we know where the peak volume of the last sell signal is located. So if Team Bull is going to have a really exciting day or next week, we're going to have to beat the previous key volume trend of the last sell signal operation. All right. I know that's a lot to take in. You're not supposed to know any of this ever in your investing career. Literally. You're supposed to be taught bull flags and bear flags until you lose all your money and stop seeking for more answers. Got it? These are not the things that you are taught in your traditional stock market investing, trading books. You know, I've built all these things. So these are not universal approaches. They are and they aren't, right? It's kind of got my own twist on it, if you will. But again, this is so far outside the realm of your bull flags and bear flags, you would never even come close to this if you just open up a book and go, oh, look for a cup and handle teacup. Yeah, no. Not going to work that way, champ. I wish it did, but it don't. So, all we can really do now, again, guys, like I was saying before, the only thing we can really do in this moment is sit back and get our pipe, put a bunch of hopium in it, light it up, and hopefully we get our rocket ship. Otherwise, this could turn into a gigantic sell-off. Literally. I hate to speak against my own trade, but if we don't break out the previous sell signal volume, then this can turn into a mega top. And when I say mega top, I just mean this could literally like that. That would be the worst case scenario. Now, granted, we wouldn't let it go like this, right? Why? Because we know that the market is what? Bullish above the 50, bearish below. So if we ever started establishing below the 50, then we would just take the trade off and then wait for the market to reestablish the 50, right? So, all we can do right now is sit back, be patient. Hopefully the hopium kicks in and Santa Claus comes to save the day. More like the algorithms come to save the day, and, banks and people that like to force drive markets, we need their help. Now, here's the other thing too, is if you look at this move, right, it might be I hope it's not too soon. But if you look at this move, right, it's just one move up. And maybe we transition the 50 and squeeze out. There would be no established high or low off that move, right? But it can happen, and it does happen, right? And when it's more likely to happen is when the market doesn't want you to participate. If the market doesn't want you in on the long and it wants to do it, it's just going to go. So people to go, oh, well, we need a higher low. And yeah, good luck, champ. That shit's gone, right? And you never really know. You never fully know sometimes if we're going to get a higher low or if we're just going to break out and go. And that's kind of always the guessing game. But, if I was the one that controlled the market and I wanted to give a Santa Claus rally, and I wanted to do it in a way that basically prevents people from participating as easily, I would turn the market positive and then just run it. And I wouldn't reset the market to a noticeable higher low, right? I would jam it, right? That's what I would do. And that's speaking in the sense that the markets typically, in terms of short-term trading, a lot of times aren't so fair. So, yeah, if I controlled the market and I wanted to give someone a Santa Claus rally while also eliminating retail market participation, arguably I would just break the market out and then just run it up. Because then people go, well, I'm going to wait for a pullback. I'm going to wait for a pullback, etc. All right. And then simultaneously, if I was the market and also didn't want people to participate in the long, I would pull a trap long move, reset, then do a long, which would fall in line with basically scamming the long here, resetting it, and then a couple days later, maybe you do the higher low, then you have to reestablish, etc., right? And people might get shaken out if it doesn't look like a good higher low, you know what I mean? So there's just so many different ways the markets can develop. And you can think about all these scenarios in your head. And I do, but I always come back to the foundation, and that is, regardless of what the market wants to do, whether it just wants to go, whether they want to use the sell signal VWAP location and dump the market here, we're just going to transition above and below the 50 SMA. So for right now, we pretty much tell ourselves this. For the market to stay positive, it has to be above that 50 SMA, right? So we're going to take a VWAP. We're going to anchor here. VWAP goes here. So right now, in the immediate, the best case scenario is that the market holds the 1 minute volume weighted average price of the uptrend start. That would be good. Wait a second. Is it? I have to double check where that price point's at. Or no, regular, 30, yay. Come on, market, do something good. Don't be lame. Whoever the market maker is out there, just freaking pump it, dude. Hit it with the old pumper magoo. All right, so right now, as long as the market maintains the 1 minute 50 SMA trend or VWAP trend, we're fine. So this is pretty much where we can kind of expect the market to pull back to right now. And this is where we're hopeful that it maintains, because then it just means that momentum in the immediate is stronger, right? On good buy signals, when markets are really strong and good buy signals take place, they do not break down the 1 minute, or they break it down just briefly and recover and keep going, right? If the buy signal is weaker, what happens is we come down to the VWAP area on the 1 minute, we eventually break it down, and then we reset the market all the way to the 50 SMA. So that's going to worst case short-term scenario, which is we do not hold 50 SMA 1 minute trend. Market is then going to slam back down to 50 SMA, basically resetting the market. That's what we don't want to see. But if it happens, then it's like, well, obviously, because there's only so many scenarios that can happen, right? So again, either the buy signal holds true, and when I say the 1 minute, we also watch the 5 minute. So I'm just going to make this zone from here to here, like that. So that area is our expected 1 minute, 5 minute pullback, price target, potential support, hold, if the market is strong. If it's not, we eventually just reset down to there, right? So that's how I would watch. That's how I'd assume the market is set up right now. Now remember, well, or don't, but yeah, I mean, you guys know, like we said, it's either the market breaks out 50 SMA, rallies, we must squeeze out short sellers for a big rally, right? So we're in this game where the market is basically going to decide if it wants to use the sell signal volume weighted average price and top the market into a mega short, or we're going to, when I say mega short, I mean, it can be, but I'm going to take off some of the drawings and stuff. I'm going to go back, create some drawings. We're going to make it real simple, right? And then we're going to add the... So let's look at it this way, right? So look at where the market has topped so far. Directly at, well, this is incorrect. It should be like here. Here to there. So essentially that is our sell signal VWAP location, which basically tells us unless we're above that price, we're not going to really squeeze the market out too much more. So this either becomes if you make it simple, it would become this is a mega breakout and or a mega top. That's how I'm thinking about that in kind of the slightly bigger picture, right? But at the same time, where is the 50? But at the same time, we know we broke over the 50, which is here. All right? So we know that currently the market is positive 50. Shoot. Right. Hold up. Did I do that wrong? Or that was the SPX. I see. So there you go. Again, the levels on the SPX and the SPY are a little different, but we use them both. That would be there, and then that would be the 5 would be there. So yeah, from here to like something like that. Yep. So pretty much, as long as the market maintains this green box on the screen, that's how I envision like immediate intraday trending momentum is still okay as it relates to the market shifting positive here over 50 SMA. If we start to do, then it's going to go like that. Okay. So we're at a very big inflection point for the market. Dang, YouTube really just does not want to pump the stream, dude. It's all right. One day, maybe. YouTube just loves to give you the CNBC hypotheticals, you know. We like to give you, actionable foresight, target, reasons, all the goods. So far in today's stream, we've covered, well, I don't even think we really looked at Bitcoin, but we've gone over the volatility index, hedging of volatility, the S&P 500, anchored VWAPs, Fibonacci, volume profile, psychology, dollar cost averaging, portfolios, 401k, metals. I mean, man, that's quite the encompassing stream for the day. Come on, Mike. We need it to pump, dude. Call your friends up at the New York Stock Exchange. Give them the good news. Again, the market is so not really the market's conflicted, but it's at an inflection point. Like someone behind the scenes is basically going, okay, are we gonna pump the living crap out of the shorts, or are we gonna decimate the longs? Like that. If you ask me, like that's the questions being asked right now: is do we want to squeeze the shorts or do we want to decimate the long? And I don't really have the answer. So let's go look at the market internals. As opposed to just looking at the chart, let's see what's happening behind the scenes. So far, the S&P 500 is basically flat sideways. It's up flat sideways. The New York Stock Exchange is up flat sideways. What am I doing? Yeah. But the Magnificent Seven, that's where we put the gains on today. So we got to pretty much, thank the Magnificent Seven today for going up because that's why the market's up. Now you can see, so you know that most of today's stock market gains and patterning were developed off the back of the major market cap stocks, Magnificent Seven, and a handful of others. We now see that they're not really going up. We now see that the market is not really going up. So if we want the market to keep going up, we now need one of really two things to happen. Either the Magnificent Seven continue going up, or there's a trade of hands in the market where the market stops using the Magnificent Seven as the driver of today's pricing, and they transition to using the advancing declining issues of the S&P 500 or the New York Stock Exchange to advance market pricing. Sometimes they do that. When I say trade of hands, I mean many times you will hear me say, if the Magnificent Seven aren't going up, the market's not going up. That's usually true, but there's also times where they will literally pause the Magnificent Seven and then rotate into S&P 500 in a broad enough way to keep running markets. As I said, I have to lean on the side of the pump because obviously Christmas, psychology, Santa Claus, I just have to be optimistic because you know, I'd rather be optimistic than pessimistic going into Christmas and the holiday season. And I think that as greedy as the stock market is, there is still some good in it. And that is, we're going to get this goddamn Santa Claus rally. Your bags are getting pumped. Everyone's bags are getting pumped. The only people's bags that aren't going to get pumped are the Bears. And we're about to just absolutely give them just an absolute shellacking. We're going to poop on some toast, spread it, and feed it to them here in a quick bit. Quick bit might be like over the next couple days. But if you do in fact see the stock market pump all the way to $684, do not be surprised, kids. Do not fear and do not be surprised. It was all pre-planned. Leading into Christmas. Leading into Christmas. Leading into Christmas. Come on, baby. Give it the pump that Connor's portfolio needs before year end, baby. Let's go. Oh, snap. I gotta go. It's 11 o'clock. I got an appointment. I gotta meet a tenant at some property we're showing, so cheers. Hopefully, I'm driving to meet this tenant. I get an alert from CNBC, $684 on the S&P 500. Santa Claus has arrived. He's showering you with gifts. That would be just an absolute blessing. Thank you, baby Lord. Let's get it. All right, cool. I'll see you guys tomorrow. Cheers.